Today we're in conversation with Darrel Scott, board member at the International Accounting Standards Board. You'll all be aware that the board has kept us very busy over the last several years with the new standards that have come in, IFRS 9, IFRS 15, IFRS 16, and for some of us possibly even IFRS 17. And this is not the end of the road in terms of where the accounting standards are going and the changes that are coming our way. So today we're going to be talking to Darrel so you can paint a picture to us as to the sort of things that we can expect in the landscape ahead. Darrel, thank you.
Thanks, Ray. Hi.
Just as a kick off, if you can tell us where we are and where we're going with all the changes that the IASB have been working on over the last several years and where we'd like to go into the future.
So I think, Ray, importantly, on previous occasions, we've talked about the fact that we'll be going to a period of calm. And to a certain extent, we are in that period of calm. Now, when we use the phrase, we didn't mean that you're not going to see anything coming from the IASB at all. What we were essentially talking about is there's going to be a limited number of new standards coming out, a limited number of new changes coming for entities applying IFRSs, but certainly there will be a lot of work towards future changes. So I think right now what's happening in the IAS space, there's two significant changes to standards that are being discussed. The first is the change to IFRS 9 to reflect the effect of IBOR. Now, IBOR is the benchmark rates or the benchmark rates used across the world by various jurisdictions to create a forward interest rate curve. And as a consequence of various regulatory changes, those rates are changing now and are going to change over, call it, the next 3 years. We needed to update IFRS 9 to reflect how those changes are given effect to. And so that's a standard that is issued in the last couple of days, phase 1, and will be issued in a year's time or so when we issue what we're calling phase 2. It's an amendment to IFRS 9, so it's an amendment to an existing standard out there, but it will certainly have repercussions for those jurisdictions that are going through IBOR changes at the regulatory level. So that's the first of them. The second that we're busy with at the moment is amendments to IFRS 17. These are amendments that have come through from the drive from entities actually implementing the standard. And as they've recognized issues, identified issues that they believe need to be changed, they spent a little bit of time giving us feedback, and we've taken that feedback into account and proposed certain changes to the standard. The objective of those changes is to make implementation of the standard easier. Those are the only two significant changes that are actually happening in the practice of standards. But then we've got a whole bunch of work that's happening in the background, as I said, and that's moving towards the idea of actually implementing new standards at some point in the future. A lot of it is early phase work, so we're not going to see changes coming through in the short term, but clearly we're looking for feedback from our constituents, and so there's an element of work involved from the constituent base in terms of what they have to do. So just to pick up on a couple of those projects I think is important. The first one is primary financial statements. That'll be an exposure draft that we publish later this year or early next year. And that exposure draft is going to deal with what the income statement in particular, statement of financial performance in particular, actually looks like, what subtotals and things you need to consider there. It is also dealing with a few other things like the nature versus function argument, and some disclosures around things like management performance measures. So that's primary financial statements, an exposure draft that we're looking for comment on, and clearly at some point in the future that will eventuate in a standard. The next one that we're busy discussing at the moment is around the topic of rate regulated. Rate regulated is a very specialist business. It's a business where you have a specific mechanism by which you determine the price you charge your customers. It's a project that the IASB has tackled before, and again we're getting into this project now with a view to looking at whether or not we can provide an accounting model that deals with the assets and liabilities that are created by the relationship with the regulator. So that's the second significant project that will be coming out quite soon. We've also got a couple of research projects that are in process at the moment. DRM, which is our name for Dynamic Risk Management, essentially the macro hedging project, and we expect to see a discussion paper come out on that from a research perspective. Business combinations under common control is another project that we expect will deliver a discussion paper sometime in the near future. And I guess those are probably the big projects outside of the disclosure initiative that we're busy with right now.
Okay. So the board has, thank you for that. I think that the board has put out, and various regulators as well around the world, have been making a lot more emphasis on the last bit that you mentioned, the improving the quality of reporting. Where are we with that, with the disclosure initiative project and improving on the quality of reporting in general?
Okay, and I think this is one of those projects that's actually got quite a lot of bits and pieces happening around it. So I mentioned earlier primary financial statements and management performance measurement. That's a project that's coming to fruition quite soon as an exposure draft, and that is one element of this. So that looks at the primary financials, the balance sheet, the income statement, the cash flow statement and the like. It looks at management performance measures, as I mentioned, and clearly those are communication elements. But other elements that we're looking at here is whether or not there is too much disclosure in financial statements, whether there's not enough relevant disclosure in financial statements. And we've identified that problem in part relates to materiality. And so we've issued a practice note on materiality to help people better interpret what materiality really means in practice, how to apply materiality, how to decide if something is material or not. We've also identified that there's something we need to look at in ourselves, which is whether our standards are worded in a way that allow people to exercise judgment about what information is relevant and what information is not. And so we've identified a framework that we think is important about how we might think about that going forward. And we're applying it to two standards, IAS 19 and IFRS 13. IAS 19 employee benefits, IFRS 13 fair value. We're saying if we were to have written those standards applying our new framework, how would we write the disclosure section? We're busy with that right now, and we expect to publish something on that as an exposure draft sometime during the course of 2020. And that'll be an opportunity for us to test whether or not we can better word disclosure requirements to reduce the amount of disclosure that's out there. Another element of that project that we're busy with at the moment is management commentary. Management commentary is complementary information that gives context to the financial statements. We don't expect to prescribe what should be in management commentary, but we think we can help people think about how they provide their commentary and how they better work the financial numbers with the commentary that gives the context on that. And then I think the final element that we're spending a bit of time on now is how information is delivered to people. And that would be our XBRL project, specifically how you actually deliver content in an IT world, if you like, in a fourth industrial revolution type world. And so we're spending quite a lot of time working on that delivery, improving the way our XBRL model actually works, and consulting a lot on the way XBRL is actually set out.
Can I just touch on a little bit? We've got the exposure draft at the moment that is out on IAS 8. And how we craft accounting policies and what information we provide. How does that tally with what's sitting in the XBRL project? How do the two talk to each other?
So I think it's interesting that this certainly, and we've got lots of little bits and pieces that we're doing around the edges of the communications project, and this is one of those elements. What we've heard from a lot of users is there's an awful lot of boilerplate information that comes through in accounting policies. Essentially, and I remember our accounting policy note is many, many pages long. A lot of it simply repeats what the requirements of the financial financial standards is of the IFRSs are. And that information from the perspective of a user of financial statements is really difficult to wade through, because they need to read all of it just in case there's something in there that is relevant to the analysis they're doing. But as I say, in many cases, they're simply receiving the boilerplate information. So the objective there is to try and narrow down and refine the way people think about what they put in the financial statements so that it is useful and relevant, but that it doesn't necessarily require just the repeating what is actually in the financial standards, the IFRSs.
Okay. Now, thank you. I think that if I move on from full IFRS, as we colloquially call it, to IFRS for SMEs, what is the status of that project?
Okay, so there are two interesting projects that are actually happening in this space, and let me start with the more vanilla one, which is the IFRS for SMEs project. When we wrote the standard originally, we said that we would not look to constantly update it, but instead what we would do is provide a stable platform for a period of time, and then revisit the standard periodically to update it for changes in the market, for specific requests from SMEs, and to keep it aligned with full IFRS. And we're now going through that periodic review. We started the review this year, 2019. The previous review started in 2012. So essentially what we're looking at is a 6 or 7 year period of calm, if you like, in the IFRS for SME space. The objective now is to look at the issues that have been raised with us, things like the scope of the standard, things like cryptocurrencies and how cryptocurrencies play out in this particular standard, areas where the standard is not aligned right now with IFRS, like borrowing costs and intangibles, but also to look at all the changes that have happened in full IFRS. And now we talk about IFRS 9, IFRS 10, 11, 12, all the way up to 17, and consider whether or not the SME standard should be aligned with the changes that happened in full IFRS. This is part of our periodic review. The next step in the process will be the publication towards the end of this year or perhaps early next year of a request for information. That request for information sets out the board's preliminary views on the direction we might take on those big questions and asks people for their views. Based on what we hear back, we will then script an exposure draft, which will be a draft revision to the IFRS for SME standard, and then look to publish something by probably late 2021, which will be the new IFRS for SMEs. So that's where we are on that project. As I said, there are two projects that are going on in this space. The other one is described as the SMEs that are subsidiaries project. This looks specifically to resolve a problem which occurs for subsidiaries of companies using full IFRS that are themselves actually qualifying as SMEs. And those companies essentially have two options in terms of preparing their own financial statement. They can either prepare their financial statements using IFRS, in which case they'll be disclosing a lot of information that is not relevant to their user base, given that they are SMEs. Yeah. But at least the data, the recognition and measurement they use is consistent for their consolidation reporting as it is for their own reporting. Yeah. Alternatively, they're allowed to use the SME standard, and that'll give them a lot of relief on the disclosure side, but they'll now have two recognition and measurement bases, one for their own financial statements and one for the consolidation pack. Yeah. This project sort of seeks to bridge that gap. And what it looks to do is to allow these companies to use IFRS for SMEs disclosures with full IFRS recognition and measurement, hopefully provide the relief on the disclosure side while still only requiring them to present one set of figures.
I'm sure there'll be a lot of people out there that will appreciate that particular approach to the standard, because I think ultimately, this keeping two sets of books has been quite challenging for a lot of companies. Especially when they still need to report to their parent. Good. Thank you very much, Darrel, for your time. And folks, this is what we have to look forward to as we head into 2020, and see how we progress with all the changes.